We've got the chairman of the Prime Minister's Economic Advisory Council, Dr. Rangarajan, joining us on the phone line. Dr. Rangarajan, how would you react firstly to the 1.8% number for December?
It is certainly disappointing. One had thought that there will be a cut in industrial production in December after having seen the revival in November. And there were also other indicators which showed that industrial production might pick up. But once again, we feel that there are two areas or two segments in which which have been responsible for the decline in industrial production. One, mining has shown a negative growth rate, and within the use-based classification, we find capital goods industries have shown a sharp decline. But I have a feeling that there will be a revival of industrial production in the coming months. That is what other indicators are showing. Therefore, we should see better performance in January, February, and March.
Right, but Dr. Rangarajan, to the extent that within the manufacturing sector, we've seen an extremely sharp drop from 6.6% to 1.8%. Do you believe there is a case for the RBI maybe to move a lot faster on reducing interest rates going forward in order to support growth?
I think the stance of monetary policy will be determined largely by what happens to the inflation rate. It is the behavior of inflation which will largely determine what course of action the Reserve Bank of India will take. Therefore, unless there is a very definite decline in inflation rate, the Reserve Bank may not change its policy. But if, on the other hand, if in January we see a definite decline in the price level, then perhaps that may be the occasion or they provide the opportunity for the Reserve Bank to change its policy.
Right, and also, Dr. Rangarajan, going by the IIP numbers that we've been getting, again, focusing on the global environment that we are seeing, and again, also the domestic challenges that that corporate India faces, would you still go with the 7% GDP growth number for the current financial year?
I think so. I mean, the estimate that the CSO has used for the manufacturing sector is still very low. And even with that, probably the growth rate is estimated at 6.9%. I believe that agriculture will do slightly better than what the CSO estimate has shown. And therefore, it should not be surprised that if the overall growth rate is around 7%, it could be 7 or 7.1% still.
And Dr. Rangarajan, how crucial do you believe the policy making will be in, decision making and going forward? What is your stance on that?
Well, I think that things will improve, and there is a much greater effort to see that the targets for production and output capacity creation in some of the crucial infrastructure sectors are met. That is why I believe that the growth rate for the next fiscal will be better than this year. In my own estimate, the growth rate next year could be around 7.5%.
Dr. Rangarajan, also the capital goods has been fairly volatile, and this time around it's at minus 16.5%. The trajectory continues to worsen on the downside. When do you expect investment and sentiment to pick up here?
Well, I think the capital goods industry numbers are showing high fluctuation, and there is no clear evidence other than the numbers put out by the Index of Industrial Production to indicate that there is a strong downward trend there. But yes, investment is slowing down, but there is a possibility that in the coming months investment can pick up. I particularly believe that if the public investment in the crucial infrastructure areas like roads and power and railways improve, that will itself act as a stimulus for the private investment to pick up.